Did you know there's a little-known IRS rule that could legally save you thousands of dollars in taxes, completely under the radar for most Americans? And no, this isn't some shady loophole or gray area trick. It's fully legal, IRS approved, and hiding in plain sight. It's called Section 280AG of the IRS Code. But people who know how to use it call it the Augusta Rule. Why? Because it was originally created so rich homeowners in Augusta, Georgia could rent out their homes during the Masters golf tournament without paying a dime in income tax. But guess what? You don't have to be rich, you don't need a mansion, and you don't need to live in Georgia to use it. The IRS lets you rent out your personal residence for up to 14 days per year and not report that rental income at all. That's right, up to 14 days of tax-free rental income. Now here's the smart part. If you own a business, even a small one, you can pay yourself rent from your business for meetings held at your home. Your business gets a tax deduction, and you, the homeowner, get tax-free income. Let me break it down with an example. You own an LLC or S-Corp. You hold monthly strategy or team meetings at your home office. You document everything, date, agenda, attendees. Now, let's say fair market rent for similar venues in your area is $500 per day. Renting your home to your business for 14 meetings a year, $7,000. The business deducts the $7,000 as a legitimate expense, and you, the homeowner, do not have to report that income on your personal taxes. This isn't a just do it and hope for the best kind of move. The IRS is fine with it, as long as you follow a few basic rules. Do not exceed 14 rental days per year. Have meeting agendas and attendance logs. Document fair market rental rates. You can use Airbnb rates, hotel conference room prices, or a quote from a local event space. Use a written rental agreement. Why does the IRS allow this? Because they specifically carved out this rule in Section 280AG for personal residences. The law says if you rent your home for 14 days or fewer, you don't have to report the income. Period. And if your business is a separate entity, it can pay rent for a meeting, just like it would to a hotel or office space. It's a clean legal transaction. So who qualifies to use the Augusta Rule? Small business owners, freelancers, consultants, anyone with an LLC or S-Corp, even landlords managing their rental business from home. Basically, if you run a business and have meetings, this can work for you. A few big mistakes that'll get you in trouble. Don't try this with more than 14 days. It voids the exclusion. Don't just make up rental rates. Document them properly. Don't skip the paper trail. Have a rental agreement and meeting notes. Setting this up is easier than you think. Draft a simple rental agreement between your business and yourself. Look up comparable rates. Schedule and document your meetings. Cut a check or transfer money from your business to your personal account. Keep it all in your tax records. So if you're running a business and not using the Augusta Rule, you're literally leaving money on the table. This isn't just smart, it's IRS-approved strategy. Want more tax-saving strategies like this? Subscribe, hit the bell, and drop a comment if you want me to show how to write that rental agreement step by step.